Look for stocks you'd love to buy, even when they are tough to hold. I was asked this week about stock in Tesla, the next-generation automaker whose shares have been the talk of the market for the last year, when they went from roughly $300 to about $800. Tesla, I said, is a stock that I'd love to own but would hate to buy. That, by the way, is why Tesla stock isn't in my portfolio now and isn't likely ever to get there. Conversely, right now, ExxonMobil is a stock that I hate to own, and, yes, I do own it, but would love to buy. It's a confusing world for investors right now, and many of them fall precisely on the sides of investing exemplified by these stocks, looking at stocks that are facing divergent market forces, leaving investors somewhere between those concerns, between the proverbial rock and hard place. For investors trying to navigate current markets, which beyond heightened volatility feature a small number of stocks that are the issues lifting the indexes back to record highs, it's a good time to consider the potential differences between issues that are difficult to buy versus hard to hold. The difference is not semantics. Clearly, anyone who has been riding along in Tesla stock has a lot of reasons to be happy. The stock has defied gravity, has bounced back from every bad news headline and from the severe pressure of short sellers, and has reascended to its heights every time it seems headed for a fall. A year ago the stock was trading at about $310 per share. The stock lost about 40% of its value down to roughly $177 in early June before going on a 7-month run that pushed shares past $900 and that currently sit below $800. That's the kind of investment gains that can be life-changing. Frankly, everyone would love to own a stock that has done that well. Yet, those characteristics make the stock difficult to buy and hold. As a long-term investor, I question whether I could have accomplished those gains with the stock, meaning the decline last spring might have shaken me out, the trade war with China and resulting headlines and impact would have made me nervous, and the short sellers would have made me hesitant. Yes, Tesla has plenty going for it, at least if you drink the Kool-Aid. I'll leave it for someone else to make that case. The point is that given what I look for in investments, I couldn't bring myself to buy it, even if I love its potential. Disagreement makes a market, and the market around Tesla is frothy, thanks to those short sellers feeling very different from the company's fans. Then we get to ExxonMobil, a stock which traded in the $80 range 10 months ago but which is now trading closer to $60. That's a 25% decline, roughly, and plenty of studies show that investors start bailing out on stocks when declines reach 15%. You can't blame investors for blanching in the face of a loss. For more on this story, visit the news article link.